Moving Iron Podcast is proud to be part of the Global Ag Network. The network is live, so check out globalagnetwork.com for more details and updates. Now on to the show.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast Market Rundown with Chip Nellinger. Chip is with Blue Reef Agri Marketing, and he is in, just outside Peoria, Illinois, and Morton, Illinois. So, Chip, how you doing, bud?
Hey, doing real well. How you doing, Casey?
Not too bad, man. I've been watching this market here. We had we've talked about it. The amount of volatility that we're seeing right now is unprecedented. We're seeing stuff bounce all over the place and huge, not just huge weekly swings, but huge intraday swings. I think Friday everything kind of finished up. Had a report come out on Friday, right, or Thursday? Was that of last week? Is that right?
That was 2 weeks ago.
2 weeks ago. Okay.
We had the July crop report.
Yep.
The big one's going to be upcoming, though. We're talking about choppiness. August 12th is the next big report, and it's the August report's always important, but this one's going to be even more important because they're going to do an acreage resurvey.
Yep.
And this one, instead of surveying farmers, they're actually going out and checking 1 square mile plots, so to speak, counting, how many corn acres, bean acres, other acres, prevent plant acres. They're going to use satellite imagery as part of this resurvey. They're going to use initial preliminary RMA prevent plant data. And so this thing is going to be the potential for a wild one because I've never seen in my life, and it's just because of how late we planted this crop and the specifics around the June acreage report. I've never seen such a difference of opinions in my life. It's kind of like Democrats and Republicans right now. You got the Bears thinking demand sucks, and we were going to intend on planting 97, 98 million acres, and that June report had the prevent plan in it, and the number's 91.7, and we're going to go on down the road, and crop's great, and we're going to have a 2 billion bushel carryout. And then you have the other side thinking, no, there were no prevent plant acres in there. We were going to plant 91.7, and you're going to take 6 to 8 million off of that. And on top of that, the crop stinks, and we're going to $6. So, somebody's going to end up being disappointed in this thing, and it's just going to produce even more volatility than what we've seen. So, about 3 weeks away is going to be, D-Day here for the August crop report, and that could really be a wild one.
Yeah, what I've noticed here the last 2 weeks anyway is that you'll have 2 or 3 days up to maybe 4 days of downward trends, and then you'll have like Friday, for example, where corn was up huge, beans were up 20-some cents. I mean, everything took off like wildfire, and then it just kind of slowly chops it back down to about 429, 430, and then it takes back off again, and then it comes back down to about that. So is there some technical limits in there? Is that what you're seeing, or what's driving that consistent back? I mean, that consistent point back down is always within 2 or 3 cents. It seems like of that 430 range. Is that what's driving that?
Well, 430 is kind of a battleground here. So you've got a lot of stuff going on there. You had kind of some old lows down there a couple weeks back. 430-ish. You've got the 50-day moving average in corn at 430. We poked beneath that yesterday. Funds have a big long position. So, the 50-day moving average kind of is the stop-go line in a lot of cases. So you close below there, opens the door up for some liquidation. But last night, yesterday afternoon's crop condition report, the market was expecting, steady to maybe a touch better. Actually went down 1% in corn and good to excellent. So you had a little bounce in the overnight. So right now you do have kind of a battle going on just roughly around this 430 area in December corn. That rally Friday in the beans, everyone was scratching their heads a little bit wondering what's going on here. There wasn't a lot of news that would make you think beans are going to be up 20 cents. There was a little bit of optimism that maybe we're going to restart some talks with China. There was some talk over the weekend that they're making up a list and checking it twice for this big laundry list of, commodities they're going to buy. The market is hopeful about that, but they've been burnt so many times on that news. It seems like that's a negotiating ploy for China, right? They're like, okay, they're having this. Here's our list, boys. Yeah. Boy, you better come to the table because we got this mile-long list of all this stuff we're going to buy. And the market gets all excited, and then 10 days later, it's like, where'd China go? Where's all the ships sending all these massive amounts of commodities to China? Oh, they didn't buy any.
Right.
So some of that talk was in there late Friday, and then over the weekend. Weather is part of this as well, right? We had that big kind of heat wave move through. It ended up not lasting as long as what was feared. I know here locally we had maybe 3 days of it, and it was brutally hot. Mm-hmm. But in the forecast prior to that, they were talking 6 or 7 days of 95 to 98 degree heat and no rain. We only ended up with 3 days of it, had a small dose of rain, more rain around than what was forecasted. And now it's like yesterday afternoon and evening, it was almost chilly here. So we cooled way down, and that heat left. And so some of that, it's perfect for the crops. I think our high yesterday was 80, 81 degrees, nice breeze, no humidity, pretty nice out. So all that's thrown into the pot here, and it just creates all these big intraday swings that you're seeing. When the market breaks, the camp that says no, we're still gonna drop 6 to 8 million acres out of this thing. They're buyers. When the market rallies, you've got the camp thinking, oh, we've got ample ending stocks and we've got this great crop growing in the field. We better sell this thing. So it really is creating some big swings in here. And beans, just lot of short beans. I know there's no 100% correlation between, size of the bean plant, the how tall that plant is versus what they're going to yield. But they have a tremendous amount to go here. And we're running out of daylight, kind of no pun intended. That's what it is going to come down to in beans. And there's just a lot of small beans out there, and they're not growing very fast. And just kind of scratch your head on how good these things are going to yield in the end result.
Yeah. The USDA and those reports that come out with, and then there's some internal rumblings of they're counting somewhere between 7 to 8 million acres of prevent plant was done. You kind of hear that get tossed around on social media and other places. They got some of their own turmoil themselves with moving their office to Kansas City, and half the people are going to quit, and all this. They don't even have an office yet, and everyone has to be there by September, and they don't have it. There's all kinds of crap going on there that kind of makes you wonder at this pivotal time when you start looking at what's going on with the crop, what's happening with the market, and the one institution out there that's kind of that controls everything that happens, basically with the reporting of what's going on. Obviously analysts have, there's a million different folks that go out there and do crop tours and do different kinds of reports and so on and so forth, and they report all this stuff back. But at the end of the day, the USDA reports are the ones that drive all of the markets, whether it's, all the commodity markets. And they have a lot of stuff to kind of get their house in order here, it sounds like. So I guess as you take a look at this August report, are you expecting that 7 to 8 million acre thing to be a legit thing, or I guess it's just one of those things you don't know what you got till you get there type of deals?
Yeah, that's a tough question. I do think 7 to 8 million acres is very legit. As I drive across Illinois, I haven't been really out of Illinois, so to speak, during the growing season here, or since corn's kind of got up and growing, or the end of planting. But I have driven pretty extensively in Illinois, and my estimate is that there's at least 1 million acres of prevent plant just in Illinois. The north of Interstate 80 in Illinois is a disaster zone. And I don't know if people, I was shocked when I drove up there. So I think on the one hand, you have people that are sitting in an office saying, yeah, it wasn't that bad. There was a little bit of prevent plant. When you drive out in the country in those areas that it was the wet, I mean, it is mind-boggling. And I'm talking, these are flat, black, good soil, 250 bushel type corn ground. And it is just every other field you drive past has weeds, 5 feet tall in it.
Yeah.
And so I'm a believer that we do have a massive amount of prevent plant acres. I think the question that you're answering, though, is what is going to drive so much volatility on this August report. There's just no way of knowing. There's just absolutely no way of knowing because they extended the date. Again, I'm going to get my soapbox here because this is the thing that frustrates me the most about this acreage reporting thing. I understand the June report. They have a process they go through, and they have a survey, and they do the same survey every year. That's what you want, right? The same process, time frame, and questions on the survey. Well, it just so happened this year, latest planted crop in history, and the survey was useless because we hadn't planted millions upon millions of acres of corn and or beans yet. So they went ahead with the survey, which makes sense, but it caused more questions than it answered. And now, they give farmers till the 15th of July to certify acres and turn in prevent plant. They extended it this year in some states to the 22nd, so yesterday. And it's frustrating because you would think, okay, give those county FSA offices a week, 2 weeks, 3 weeks, whatever they need to crunch all the data and push a button, and boom, you're going to have your prevent plant number to the 10th of an acre. But in the past, they have not ever really reconciled that prevent plant number with from the RMA part of the USDA with the NAS part of the USDA that does the crop reports. Will they this year or not? I don't know. And it's kind of interesting. I did see some a news story out over the weekend that now you have some legislators in this, right? So you're getting enough public outcry about the acreage reporting system from the USDA that you actually have, at least in Illinois, some representatives that are saying, "Hey, this is harming farmers, right? This is not allowing for the free market to do what it needs to do because we don't have the information. And not only do we not have the information, the process isn't even right, and it conflicts with what the market needs." And so my hope is that there's enough technology out there now in the reporting process that they are going to have at least, they won't have all the data, but they'll at least have an initial feel, I think, from the RMA, along with satellite imagery and actual visual spot checks, that they will pick this up. So I would expect personally that you're going to see a pretty significant drop in acreage on this report in corn and possibly even beans, but you just don't know. And that's the wild card that makes this August crop report going to be such a wild card and a potential for just massive volatility. If they come out at 91.7, then you have to logically say, well, okay, that was right. We were going to plant this massive amount of corn acres. You take a number off of that, and 91.7 is it, and we'll probably limit down. If they cut 5-6 million acres out of corn, I don't think the market's ready for that. You probably limit up. So anywhere in between is a possibility come August 12th. And between now and then, we've got about 3.5 weeks. Weather, China news, crop conditions every Monday afternoon. That's going to fly this thing back and forth too. So it's really a tough road to navigate out there, and really psychologically hard with all these swings, especially if you're in an area that just been these guys. It wasn't just like it started raining in May 20th and they couldn't plant. I mean, it's been a psychological battle since fall. These guys had horrendously wet fall, couldn't get the crop out. The worst winter in history, coldest, most amount of snow in many areas, and it just kept going. Mm-hmm. These guys haven't had a break out in the field since September 1st.
Right.
And now you got the markets just, going all over, and all this uncertainty with acreage and yield, and it's been a rough go of it if you're a farmer.
Yep. Yeah, it's been a crazy stuff. Plenty of stuff to pay attention to here coming up here in the next month of October, especially leading up to that report. There's going to be a lot of anticipation that's going to again cause just epic amount of a fluctuation and just driving the market one way or the other throughout the day. And I've seen it several times where it starts out 7 or 8 cents down, and by the end of the day we're up 10 cents. You know what I mean? So you had an 18-cent swing in a day, and I'm not exaggerating that. I mean that's you see these huge swings in the market, or they start up 10 cents and go the other way. So it's just a crazy thing we see happen in the markets right now.
No doubt, and it does. It's hard to get through, but it does create opportunity. If you have a plan and you can navigate that, and you're ready for it. There's 2 ways to do it, right? You can say, okay, this market's going to swing. We know there's going to be big swings. We've had a high almost 470. I think the low here has been recently 428, something like that. So you're talking a 42 cent swing. This is just in the last 2 weeks, 3 weeks, right? So the market's going to move. It's going to allow you to maneuver in that movement if you have a plan. If you don't have a plan, you're going to want to stick your head in the sand, not worry about the markets, and opportunity is going to pass you by, and you're going to become a victim of the volatility instead of potentially using that volatility as a competitive advantage. So it doesn't make it easier to get through. I'm not saying that it's an easy road, but boy, it's definitely not time to just turn your DTN machine off and not worry about the markets, because
it's more important now than ever.
It matters. Dollar and cents are flying around no matter what your yield is. On a daily basis, it's a lot of volatility in your revenue.
Yep. All right, let's talk about the protein markets real quick. Cattle, again, volatility has been there too. It's been all over the place. One week it's up, next week it's down, and might stay down for 2 weeks and bounce back up. So talk about the cattle market here and kind of what you see happening there, what's the driver in some of those markets.
Sorry, Casey, cut out on you there momentarily. Cattle complex has been under some pressure here in the big picture over the last several months, several meaning 2 or 3 months. We went from the funds having basically a record long position. They took profits. It took them a while to get out of that position. It looks like they're pretty well cleaned out of that position. And now, as part of that, the selling pressures ended and the cash market started to bottom and rally, although last week it was down a dollar. So I think that the cattle market looks okay, that we're potentially putting a bottom in and can maybe rally a little bit. We had a cattle on feed report and the semi-annual inventory report out last Friday. Those were pretty benign, pretty well expected, nothing out of the ordinary there. And the cattle market was able to rally a little bit yesterday, led by the feeder cattle market. So the feeder cattle market, I think, was maybe a little bit scared of the inventory report and didn't have a lot of bearish news in there and was able to kind of rally because feeder cattle actually broke lower last week in the face of corn selling off pretty sharply, and that's kind of a weird occurrence. Usually when corn drops, feeder cattle have a little bit of a rally in them. So they've got some catching up to do a little bit. Nothing bearish in those reports. If we can trade steady to a little bit better in the cash market this week, I think the cattle market could maybe make an argument that here over the next 6 or 8 weeks you could rally a little bit. Probably not dramatically, probably going to rally $20, but you could easily rally, $6 to $10 in cattle very, very easily, especially if they keep a little pressure on the corn market here for a couple of weeks ahead of the August crop report. So I think good things are happening there. I think the worst of this downdraft is behind us in cattle. And I think it is in hogs too, finally starting to see a little life in the cutout and cash market rallying a little bit. On the hog side of the equation, we've seen the futures put a nice rally in off the lows. Technically, kind of got above some downtrend lines that from this big downtrend that we've been in. So I think the livestock sector in general looks like maybe the worst is behind us. Doesn't mean we're just going to scream immediately higher into new highs, but I think that you could see some some better levels over the next several weeks in both the cattle and hogs. And, hogs are still in all-out China watch. We know the problems they're having with African swine fever. Every Thursday, the hog market is highly sensitive to the export sales report to see if China's in there for fresh purchases of U.S. pork. They've been absent for about 3 or 4 weeks now, 4 weeks probably. And every time they are absent, Thursday morning, hogs sell off. But the last couple of weeks, they found support and then rally again. So that's a good sign. They continue to take pork. We're shipping them pork. But they haven't had any new major pork purchases in about 4 weeks. And there's still, a lot of indications that they need to refill their pipeline with pork. Basically, record high pork prices from all reports in China. So that's a good thing. We've got a lot of pork to send them. That's part of the problem that we've had is it seems like continual expansion in the pork industry the last few years. So we're putting a lot of poundage out there, but exports have been good. We had a really good export sales week last week on the pork side, with China being absent. So that's good news. You throw China into that mix going forward, and that's a good combination. So
yeah. Yeah, it's they have an issue because obviously with all the stuff that we have going on with the tariffs and what have you, there are certain segments of their market where they're allowing a tax credit or whatever, tariff credit or whatever it is, to be waived on that, and pork is one of those things. So they're waiving that 20 or 25% tariff on U.S. pork when they get it. So that just tells me that when they use up all of South America's supply of pigs, they're going to be hollering at us and getting beans and corn and everything else. I think somewhere I read that, I think it might have been actually Sean Hackett that told me this, but something like Brazilian exports to China are up sixfold from what they were this time last year, something like that. So they're just taking it as fast as they can get it, and sooner or later they're going to run out, and they're going to have to come get it from us.
Well, and then the next thing you see, which is, arguably they've been doing this for U.S. beef for a long time, is you'll start seeing other countries, Taiwan, Korea,
right?
All of a sudden they'll have 400% of normal per capita pork consumption. Mm-hmm. It's just the ship lands in one of those countries for 10 minutes and then makes its way on to China, but the official destination isn't China. So they've been playing those games for a long time for U.S. beef, and this tariff situation itself is already in a lot of ways, right? I mean, I've read the free. See, you get me on my soapbox again. The free market will figure it out, right? When you start messing with the market, I don't care what it is, subsidies, taxes, tariffs, you name it, the market will figure it out, right? So you're already seeing counterfeit tags that say, made in Taiwan or made in Vietnam, and they're just slapping them onto Chinese products, and they're ending up here anyway. So
right. Yep. Well, plenty of stuff going on. Always good time to have a plan, especially what we see happening right now. I mean, there's just from now through the end of the year there's going to be lots of volatility, irregardless of what happens, either up or down. And having that plan in place is going to help you be profitable moving forward. So, Chip, if someone's got a plan they're working on, or they just need to get started on one, what's the best way to do that? And the 2020 growing season is not that far away.
No, 2020 definitely needs to be on the radar screen here. Roughly 420 December 20 corn futures and corn, beans, and wheat. So, the plan is definitely critical right now with all this volatility. The easiest way, just give us a call. We'd love to chat with you. Pretty low pressure and no risk. So 309-550-7213 is our office number. And we'd love to chat with you about what your plan is and a few ideas on how you might be able to improve what you're currently doing.
Right on. All right, Chip. Well, take care of yourself until next week. We'll talk to you again later.
Sounds good. Have a good rest of the week.
All right, man. Thanks.
All right.
Thanks for listening to this edition of the Moving Iron Podcast, now part of the Global Ag Network. If you'd like to continue any of these conversations, you can hit me up on Facebook, Twitter, or Instagram at Moving Iron LLC. You can also send me an email at movingironpodcast@movingironpodcast.com. You can also visit the Moving Iron Podcast YouTube channel and watch Market Roundup with Chip Nellinger, Sean Hackett, and Angie Setzer. Also, Tax News with Glenn Birnbaum. Please visit movingironllc.com. Here you can find information, details, and updates for the 2019 Moving Iron Summit in Nashville, Tennessee. If you'd like to support the podcast, you can leave a review and subscribe at iTunes, Google Play, Stitcher Radio, TuneIn Radio, SoundCloud, and globalagnetwork.com. So until next time, let's go move some iron. This is Casey Seymour. Out.
Moving iron in the 21st century.